Playoff brackets are fun. Investing realities apply across a lifetime. This is Money Not Math number 140. Welcome back for another good conversation. It is Friday, May 5th, and it is a beautiful morning here in Thief River Falls. I hope it's beautiful for where you're at as well. Did you know that 1 in 4 Americans filled out an NCAA bracket just this past April or March, whenever it was? March Madness. In March. Add in all the other sports like NCAA hockey, NHL playoffs, NBA playoffs, all the different brackets that are available out there. And that's a lot of Americans guessing on the outcome of sports that they really can't control, right? And that's the key word, guessing. We like to use educated information that we think we know what we're talking about, but really we have no control over the athletes or the teams and how they perform. But so picking winners is hard. And an informed approach often helps your odds. Of course, if you never watch a game, you're probably going to have less chance of winning your bracket than if you watched every game, but it's still really hard to pick the right team. Good luck and good strategy are not the same thing. The thrill of participating in a playoff bracket or pool is often the conversations on the side with your buddies or your family. It's not necessarily, the outcome. You get a fresh start in a playoff bracket each year. Unfortunately, bad decisions this year can stick with you for several years when investing. If I have a terrible bracket this year, I just try again next year. If you make terrible decisions on your money this year, it will more than likely affect you not just next year, but for potentially the rest of your life, if not for several years. Where there are certainly similarities between March Madness or other brackets and investing, it's crucial to understand the key differences. So, in the article we're going to reference, and I'll dive more in detail here, is Hoop Dreaming is Fun in March. Investing Realities Apply Across a Lifetime, and that's by David Booth, chairman and founder of Dimensional. If you'd like a copy, just reach out and let me know. I can send you a copy of the article. Disclaimer, this content is not legal, tax, or investment advice. You should always consult a qualified professional regarding your personal situation. So with that, those are the highlights. Now let's dive more into the article itself so we can get you some more details around today's topic, which, like I said, is playoff brackets are fun, but investing realities apply across a lifetime. So every year at this time, or a couple months ago, the NCAA men's basketball tournament thrills fans and creates so much interest that it's estimated 1 in 4 Americans filled out a bracket to try to predict who will win it all. David really enjoys watching the games and always fills out a bracket in a pool with his family. This year, he couldn't help but see connections between investing and March Madness. Let's start with the similarities. Picking winners is hard. Maybe your NCAA championship bracket picks are as wrong as mine, but don't feel bad. The odds of correctly predicting the winner of all 63 tournament games are astronomically high. There's a reason Warren Buffett offered to pay $1 million if you got it right. In the stock market, most professional investors don't meet the market in a typical year. This is so important. People all the time try to utilize information from the media and from experts to beat the market. Did you know that like 97% of advice or market timers actually lose to the market? So trying to beat the market's a losing proposition. An informed approach improves your odds. If you want to do well with your bracket next year, what should you do? The tournament selection committee seeds teams from 1 to 16 in 4 regions. Always pick the higher seeded team, and you'll have a good chance of winning more games than most. It doesn't mean you're going to be the champion of your pool, but year after year, you'll probably pick more winners than most. With investing, rather than trying to guess the winners, you can take an informed approach that relies on decades of academic research and choose to buy the market. Over the long haul, U.S. stocks have compounded about 10% a year. Having a plan can help you position yourself to have a better investment experience. Good luck and good strategy are not the same. Every year, some money manager is going to have the best returns. Every year in each bracket pool, someone wins. But in both cases, it's very unlikely that they will continue to come out on top year after year. So when you hear someone talk about how amazing of a year they had last year, it does not mean they're going to have an amazing year this year, whether it's bracket or investing. Just the other day, I was listening to someone talk about the stock that they had lost. It was like $150,000 in one stock. And then they followed up quickly to tell us, well, they also made like $150,000 off that stock too. Well, did they make 150 or did they lose 150 or did they come out even? No one really knows because people like to pick and choose what information they share with us. So it's a very dangerous game to base your investing based on what other people are saying they're experiencing. All right, continuing on with the article. When people say, look at all the money I made on this stock, I feel it's the same as when someone says, I picked Farley Dickinson. No, you didn't. I don't know if anyone did. Good for you. You got lucky. How about the differences? The thrill of participating in March Madness pool with a lot of people comes from the possibility of winning the pool. His family fills out a bracket each year, and they engrave the name of the winner on the little trophy. And to most people, it's only the winners who matter. He doesn't even remember who in our family came in second last year. That's like my golf trip. Last year, I can tell you who won. I have no idea who took second. Actually, I think I can figure it out. But the point is, we only talk about the winners when it comes to playoff brackets and sports, but when it comes to investing, that shouldn't be the case. Investing is different. You should have the goal of doing a little bit better than average. You don't have to be the best. Just don't make terrible decisions to be the worst. Taking unnecessary risks can lead to big losses. As investors, we must remain focused on trying to capture the long-term compound return of the market, also known as the expected return. That means taking a cautious approach and avoiding the temptation of trying to pick unexpected winners or underdogs. And I'd like to comment on this. When he says cautious approach, I don't know exactly what he means, but my advice would be not necessarily be afraid of risk, but understand a long term approach. Don't overreact to short term events when you have a long term investment goal. So there's always next year. All right. He says with the NCAA, there's a new bracket to fill out every year. You get a fresh start. With investing, your results are cumulative, which means they add up over time and have a compounding effect. There are no do overs. We can't go back in time. There can be pain with investing. Unlike with filling out the brackets, a bad investing outcome last year sticks with you this year and always. Literally, one, especially when you're in retirement, you're drawing down that money. One really bad year with really bad decisions or outcomes because of poor planning can negatively affect the rest of your life. While there are certainly similarities between March Madness and investing, it's crucial to recognize the key differences. While there When you're picking brackets, sometimes the only way to be the big winner is to take big risks on underdogs, which can be a fun and exciting game to play. With investing, it's better to take a measured and disciplined approach with the goal of pursuing higher expected returns while reducing risk. So enjoy the Final Four or whatever sport you like to watch and play brackets and pools in, or fantasy sports, but don't confuse the risk of filling in a bracket with the risk of investing in the markets. All right, thanks. That's all for today. I appreciate you taking the time to watch or listen to today's Money Not Math conversation. I hope you have a great day, and I hope if you enjoyed today's conversation, please share it with a friend, and please comment or reach out directly to let me know what your questions or thoughts are. I love doing Money Not Math conversations based on the questions that I get from you, the viewers or the listeners. So thank you again for your time. I hope you have a great day. Bye.